Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and risk management. I'm your host, Louis, and I'm excited to have you join me today as we explore the latest developments in the financial markets. We're starting off with a story that's been making waves in the investment community. The Federal Reserve has been easing monetary policy, but some experts are warning that this could lead to unwanted outcomes, such as overheating the market and exacerbating existing imbalances. According to a recent article, the everything rally is in full flow, with Wall Street's big three indices, the Russell 2000 Small Cap Index, the tech sector, semiconductor stocks, gold, and Bitcoin all reaching record highs. Now, I know some of you might be thinking, what's wrong with that? Isn't a rising market a good thing? And you're right, it is. But the concern here is that the Fed's actions might be creating a bubble, or at the very least, inflating asset prices to unsustainable levels. The article quotes Jamie McGeever, who notes that the wealth effect seems to be driving consumption, but it's unclear whether rate cuts will actually encourage businesses to hire more workers in this environment. It's a complex issue, and one that we'll be exploring in more depth on today's show. We'll be looking at both sides of the argument, talking to experts, and examining the data to get a better understanding of what's going on. So, if you're an investor, a financial professional, or just someone interested in the world of finance, you won't want to miss this discussion. We'll also be keeping an eye on some key economic indicators, including the New Zealand interest rate decision, Japan's Tankan Index, and the U.S. Treasury auctions. And, of course, we'll be monitoring the latest news and developments from the world of stocks and finance. So, stay tuned, folks. It's going to be a fascinating conversation. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of finance and risk management. In this segment, we'll be exploring some interesting developments in the global market. It seems that investors are embracing an everything rally as nearly all asset classes, from Bitcoin and gold to global equities, are witnessing upward momentum. This phenomenon is attributed to the brightening prospects of global peace and central banks preparing for rate cuts. Anurag Singh, a financial expert, notes that with central banks reducing rates, assets will likely inflate, leading to this rally. Singh also comments on the positive impact of the recent peace deal, highlighting the optimism among U.S.-based investors following President Trump's moves toward ending global conflicts. He believes that this development, combined with the reduction in interest rates, will lead to a steady growth and disciplined allocation in the market. However, it's essential to approach alternative assets like gold and Bitcoin with caution. Singh admits that he has no way of valuing these assets, describing them as where beauty lies in the eyes of the beholder. He suggests that investors should focus on traditional assets like stocks and bonds, which have more predictable valuations. As we navigate this complex market landscape, it's crucial to maintain a balanced approach. Singh recommends a 70-30 portfolio in India, with 70% equity and 30% debt, especially during times of correction. He also emphasizes the importance of disciplined allocation and a focus on fundamentals over speculation. In conclusion, the everything rally presents both opportunities and challenges for investors. While it's essential to be optimistic about the prospects of global peace and steady growth, it's equally important to approach the market with caution and a balanced perspective. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's episode with a look at some exciting developments in the world of finance. We've got not one, but two major IPOs making headlines: Tata Capital and LG Electronics India. Tata Capital's massive 15,512 crore initial public offering has been subscribed 1.95 times on its final day, demonstrating the continued strength of India's primary market. The qualified institutional buyers portion was subscribed 3.42 times, while non-institutional investors and retail investors showed significant interest as well. Meanwhile, LG Electronics, India's 11,607 crore IPO, has been subscribed 3.32 times on its second day, with the qualified institutional buyers portion being subscribed 2.59 times. The grey market premium for LG Electronics India shares has fallen marginally to 298A or 26.1% over the upper price band of 111140. It's worth noting that these IPOs are among the largest in recent history, with Tata Capital's issue being the largest since Hyundai Motor India's 27,870 crore issue in October 2024. The success of these offerings is a testament to the growing confidence in the Indian market. As always, we advise our listeners to approach these developments with a critical eye and consider their own risk tolerance before making any investment decisions. It's essential to remember that past performance is not necessarily indicative of future results, and it's crucial to do your due diligence before jumping into any investment opportunity. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.